Welcome to Cardone Debates. It is Tuesday, February 17th, hosted by yours truly, Dana. We're met with Matt Cole, who is the CEO of Strive. We are actually just talking about, what actually is the debate that we're going to kind of articulate. The original topic was Bitcoin versus BTC, TCs, Treasury companies. But there's a lot more. There's a lot more that we can cover. So anyway, hey Gary, how's it going?
Good to see you, gorgeous. How you doing today?
I'm good. How are you doing?
I'm awesome. Yeah. Why don't we just pop everybody up so it's just, they're not just looking at us. But look, guys, what we were just, in fact, 20 seconds ago, we were still debating on what we're going to discuss, and I think what Matt and I and Dustin, we all came up with, hey, first we need to define a whole lot of definitions, because as professionals in the space, we are all like conflating a little bit into each other's area. But the concept of this debate tonight, Matt, thanks for joining us very much. Grant Cardone's in the room, Dustin Stockton. What we're going to do tonight, and you guys can like help us in your commentary to ask other refined questions, but to challenge, if capital comes into the digital asset space, should that capital, because we hear a lot of arguments and discussions on X about the difference between SBRs, treasury companies, hybrid treasury companies, hybrid Bitcoin companies, and then Bitcoin as paper products, I guess, and then Bitcoin pure self-custody. So that's what we're trying to have a debate on, the difference. If I'm putting capital to work, where should I put that capital to work? And it's very quickly becomes clear that what's an SBR, what qualifies as that? We use these terms all the time. What's a treasury, and what's a Bitcoin play? So why don't we start there, guys, and then we can decide who's on whose side. But Matt, maybe as the industry corporate, you could help give us your spin on how these things are defined.
Yeah, thanks Gary, and Grant, Dustin, Dana, thanks for having me. I think this is going to be a fun conversation. So I run a Bitcoin treasury company. Prior to running a Bitcoin treasury company, I worked at CalPERS for 16 years. I ran a $70 billion bond portfolio, all structured finance. And this kind of gets into what Gary and I were talking about before getting on stage, both our fight and Strive's fight against ESG and DEI in the early days, but also what I saw on the institutional side, and I think it's similar to what we're talking about here with Bitcoin, is that when you have a asset in Bitcoin that we're all bullish on, that we all think is going to go up over time, that gives you a lot of potential to create different risk and return profiles with that asset. And so obviously, Grant, you're doing something with real estate and Bitcoin. Strive's position is we are so bullish on Bitcoin over the next 10 to 15 years that we just want to amplify that exposure the best way we can and take what we view as a long duration asset in Bitcoin and pair it with long duration financing and really try to say whatever Bitcoin does, we're going to be an amplified version of. So if Bitcoin goes down, on average, we should be an amplified version of going down. We obviously think that Bitcoin is going to go up a lot over the next 10 to 15 years and that it's just hard to beat the returns of Bitcoin. And so we want to amplify that. We think that's going to be interesting and appropriate for a lot of investors. And then I think when you do things, whether it's with real estate or what we're doing with digital credit, things that pair income or create income off of Bitcoin, I think that creates interesting exposure for different people. So that's ultimately what we're doing. And I think this debate and conversation will be interesting to really better define what are the different opportunities. I mean, this space is so new. There was 1 million Bitcoin treasury companies that popped up. Many of them are so new, they haven't even laid out what their thesis are. My expectation is that some of them are going to do really well. I'm obviously very bullish on what we're doing at Strive. I think some won't do well. Similar to what you see in hedge fund space or whatever, where you can create all sorts of different risk return profiles, and some teams execute well, some teams execute poorly. I think the Bitcoin treasury ecosystem and Bitcoin risk will be very similar as it evolves.
So my first, and this is a quick one, but my first question, Matt, how were you at CalPERS and not like and be anti ESG and DEI? Like you must.
So it's a funny. It's a great question. So surprisingly, portfolio managers at CalPERS, like many portfolio managers, tend to lean libertarian. I would say as a philosophy. I grew up in Northern California, and my parents were law enforcement officers. Pretty much my entire family had their pension tied to CalPERS, and I graduated college right at the start of the Great Financial Crisis. And so imagine when the stock market's plummeting, pension funds are becoming underfunded, and I lived in Northern California, there was actually not really a better finance job for me than to try to fix the retirement crisis at California. And so I went there, as a young college graduate with that in mind. Like, I didn't even know what ESG was, right? I just underfunded pension. This is my parents' retirement, my grandpa's retirement, my uncle's retirement, like all of our family friends' retirement. I want to go help fix this thing because I'm a math nerd. Like, that's what I was blessed to be good with in life. And so then I go there, and then you quickly start to see all of these crazy ESG constraints. And I started there as an intern in 2006. So this is before ESG was really even a thing. But in the mid 2010s, it became more and more a thing. And initially, I just saw it as greenwashing, where it was kind of like you would say something silly, but we weren't really focused on it. So I was like, okay, like whatever, like woke California will, make our pledge, but it doesn't really mean anything. And then as we all saw, around COVID, a few years before and a few years after, it really actually did change corporate America, and it changed corporations in a really fundamental way. And I hated it. I hated that, where I was at was probably the biggest contributor to that. So I wanted to fix it. So I left. My wife and I were working on a business plan, and so was Vivek Ramaswamy, and we teamed up. And I was one of the initial team members at Strive. And then when Vivek decided to run for president, he put me in as CEO. He was not a Bitcoiner, actually, when I joined Strive. But my wife and I think, played a pretty pivotal role in orange pilling him, where he was the first presidential candidate to speak at a Bitcoin conference. Now he's running for governor of Ohio. I think he'll make Ohio massively, Bitcoin friendly. And so, I think what, late last in 2024, our viewpoint was that what we were fighting for, for capitalism, against ESG, against DEI, was, when we launched Strive, was not a consensus view. It was very contrarian. It was very, ugly fights, and it changed to be a consensus view. So not to say that there isn't more work to be done, but when your contrarian view becomes consensus, doesn't really make a great business plan to have, fight something that's consensus. And so we decided to become a Bitcoin treasury company, and that's where we are today. And, like I said, the goal is maximize returns relative to Bitcoin over the long run.
I appreciate you just giving us a little bit more elaboration on that, because I think it's fascinating how we've watched the weaponization for the left of these large public funds and pensions. And so I love to hear that you kind of are coming into this with like a revolutionary mindset, or as you put it, a contrarian mindset. I think that really helps us set the stage. So help Matt, I'm just going to ask you, like, very simply, like, I don't mind playing the dumb guy. It happens to me from time to time.
But Dustin, before we do that, so Bitcoin Treasury Company.
That's what I was going to say.
Oh, so sorry, buddy. So sorry. I thought you were
just SPR versus Bitcoin Treasury Company. Like, is there a division? Is it the same word that's just applied to the same thing? Like, can you just help us like narrow that?
Yeah, and this will be an interesting definitional conversation, because when Gary and I were, and you, Dustin, were talking before we got on, it was clear that the definitions, even amongst ourselves, were not the same. And so I've always viewed SBR, the Strategic Bitcoin Reserve, to be a sovereign nation buying Bitcoin. But that's not to say that that's the right definition. That's just the only definition that I had heard of SBR before we were kind of chatting before we came on. And then a bit BTC-TC, which I don't even like that acronym. It's hard to say, but it's kind of picked up, but ultimately I just view a Bitcoin treasury company to be a company that views the world in Bitcoin, not dollars. And so our our performance and how we judge our company, how we judge management is, are we creating value in Bitcoin terms? Yes or no, over the long run, right? And so that's how I view a pure play Bitcoin standard treasury company. Companies that are involved in the Bitcoin business or that are doing, things partially with Bitcoin, partially or not, I think they could be doing super cool things. But most of them probably aren't viewing it as, am I making value in Bitcoin? They're just saying, I have this awesome asset, I can do other things, and I can do tax arbs, and I can create a really interesting risk return profile. And I think that's definitely accurate. I would agree with that assessment.
Hey, Matt, would you guys, if you were starting all over again, would you still call yourself a Bitcoin treasury company today?
I would probably call us a structured finance company because what we're doing is just creating structure. We have a digital credit asset, and then, that's trying to strip down volatility off Bitcoin, pay a dividend and then amplify our common. So I think that's probably a more accurate way to define it.
Yeah.
What do you think?
Yeah, I just, we're looking at, moving into the space as a public company. And last July, when it was popular, when it was on fire, when the space was on fire with Bitcoin treasuries, I told Wall Street, I said, no, I don't want to be called that, because I think the wheels fall off with so many people rushing in that maybe don't have a real business plan, don't have real products. I'm not saying you're one of those, but those exist. And there's no real leadership that has experience, not just starting a company, but executing and then delivering and then exiting. And I just thought it was too many too fast with no plans. So I said, I don't want to be called that. I think that's going to be like having herpes later.
Yeah. Well, I agree with you that there was a lot of companies that launched with no plan, number one. Number two, the plan is much more complex than just having a Bitcoin treasury, right? That sounds like an ETF, right? We do have obviously Bitcoin in our treasury, but it's why you've never seen me ever make a public statement that Strive has a goal to get to 1 million Bitcoin or 100,000 Bitcoin. That's not our goal. Our goal is actually to structure our company and create structured products, do operations that enhance a Bitcoin yield, and ultimately, hopefully, outperform Bitcoin over the long run. And that could be true. We have 13,000 Bitcoin today. That could be true with Strive going to 20,000 Bitcoin, 100,000 Bitcoin, 1 million Bitcoin, or 10,000 Bitcoin. Because the goal is actually not to just increase the Bitcoin stack if it's not actually generating shareholder value. Now, my expectation would be Bitcoin's going to go up, and for us to deliver on that promise and that hope that we actually will be massively increasing our Bitcoin holdings over time. But that's a byproduct of what we're trying to do, not the goal in and of itself.
Yeah. Thank you.
So Gary, I don't know if you timed it or you put Belcher up to it, but I read his article today that seems to be being shared a lot around NACA, and so I'm still working to define would we define NACA as a Bitcoin treasury company?
So they have Bitcoin in their treasury, right? So I think it's really early days.
Is MicroStrategy?
Is
MicroStrategy?
Great question.
So we're classifying these guys as Bitcoin treasury companies. Fine with me, okay? And the SBRs are sovereigns.
Yeah, that could be the case. I think Strategy and Strive are both structured finance companies. I don't know that Nakamoto is, right? They just put in BTC Inc.
They just
bought
a magazine, right? Or a trade show.
Yeah.
So
I think it's very different, right? And the original thesis there of the Bitcoin squared in investing in other Bitcoin treasury companies seems to probably not be their focus anymore, right? So but it's early days. I mean, I think NACA, since they announced the strategy, they've underperformed Bitcoin by 59%, right? And so but it's still early. That I'm not going to claim that the funeral is in. It could be, But when you look at Strategy, so Strategy announced that they were going to do a Bitcoin Treasury play in 2020, and then we went in a bear market in 2022. And in 2022, Strategy in the depths of the bear had actually underperformed Bitcoin by over 100%. They were up like 25%. Bitcoin was up like 150, 160%. So there was a massive underperformance of Strategy 2 years after they began their strategy. And today, since 2020, they've actually outperformed Bitcoin by over 350%. And so even in our current bear market, I would argue that strategy for MSTR has played out really well. It's just a volatile ride. So I think Naka's future will depend on if their management team can actually execute on a coherent vision going forward. If they can, they'll outperform, and if they can't, they won't, right? And I think it's been a bumpy ride for them.
So I don't want to bang
they
on
just consumed one of the worst businesses you can get into. I mean, the only thing that would be worse than him buying his own conference business would be buying his own restaurant. I mean, it is amongst the greatest failing businesses.
Grant, actually, like he's done very well there. He is the only buyer of that business, I think, and he probably got overpaid for it. So,
well, yeah, I think they paid $100 million for the magazine and for the conference. I'm just telling you, after 40 years of doing conferences,
he owns it.
Yeah, he owned it. I mean, that's even worse to me. That's even.
Yeah. Okay, but look, I don't want to get into that. Okay, I want to get
but we already did. So let me just go ahead and finish what I'm going to say, which is, after 40 years, I just killed my event business.
Yeah, okay, but I don't want to Grant.
He was profitable without sponsorships. The moment he becomes the company and loses sponsors, that'll be like, okay, the whole show is going to be about his company. And
okay, you done? BM&R. Is BM&R in your category, or are they in this? Let's call it. I see Naka as a strategic Bitcoin reserve company because they can't buy any more Bitcoin. They've done their deal. They've got it on their treasury, and they have no strategy. They're just sitting on it. I think I'm a Bitcoin reserve company as a family. So because I'm sovereign to it. Now they could take it away. But he's a hybrid. He's he's got multiple businesses and multiple income streams. And then we're going to come to somebody like Grant, who's in a different category. Some have more debt, some have, but at least on X and YouTube, this is driving a lot of people. The misunderstandings on these definitions are really, because people are being put in buckets. And it's not really quite fair. BM&R. How would you guys define that? I saw everybody kind of go, that's a good question.
I think it's a hybrid. So here's how I would define them. They have not gone down the route of structured finance. So I would say structured finance, no. They have made strategic investments in businesses that really have nothing to do with Ethereum for themselves. And then they've issued the ATM. So if I had to put like on a scale of SBR to structured finance company, I would weight them at this point more towards the SBR because they haven't done anything on structured finance. They just had a very high valuation, and they issued equity in a creative way to take advantage of that. And I think Naka probably is also in the realm of more of an SBR at this point, to what you said, Gary, because they haven't engaged in, at this point, expanded Bitcoin holdings. Now, again, it's still early, right? Like it's only been a few months. We could have this conversation in 6 months and that could be different. Strive as a structured finance company, we started when we went public we had about 5,700 Bitcoin. We now have over 13,000 Bitcoin. So we've acquired about 5,000 Bitcoin from a strategic M&A transaction where we acquired Semler Scientific. We used your preferred equity, use that to buy a bunch of Bitcoin. So our Bitcoin stack has been expanding pretty drastically. And so, I think, for us, that is the focal point. But, with BMR, I would say SBR if you had to make me choose one.
Okay, cool. So are there any other categories, guys? that to me, the categories are pretty clear. We have financial shops that are, selling credit, buying credit, all related around Bitcoin, and they're holding Bitcoin on their balance sheet. There are other companies like NACA, BMNR, not to say they're the same companies, but they're selling other things. They haven't really defined where they start or stop. Okay, so they're just going to be the Bitcoin strategic reserve kind of hybrid play.
Almost Bitcoin adjacent would be like the last category, right?
Yeah. And then then the question, of course, is going to come up. I'm thinking of the miners. Hell, most of the miners look exactly like the companies I just defined. One or two of them, with the exception, but we'll keep the miners out of it because it's going to get. What else do we have? Anybody else fits in that, or do we have another category?
I'm curious, Grant, how you would define kind of what you're envisioning with the real estate and Bitcoin play. It's admittedly, I'm not an expert on it. It strikes me as something that's interesting from both cash flow, but also tax reserves. But how do you think about the return profile of that? What's the goal?
Yeah, so I see myself as a real estate company, but buying best in class institutional quality real estate, democratizing it to people that can never touch it. And then adding Bitcoin to give me basically a moat from the REITs. So this is really a REIT disruptor. The REIT industry hadn't changed since 1965. There's about $4.5 trillion sitting over there. So I've been competing with these guys for 10 years, getting my ass whooped, looking for some kind of competitive, some glitch. And other than, they're too big, or they can't cash flow, or their properties are run poorly, I couldn't find one really, I can't manage better. I don't have more money. I don't have more access. So I was talking to Saylor, and I just said, hey, if I add Bitcoin and don't become a REIT, I don't have to distribute currency or cash, and I can hold Bitcoin. And I'm going to go from being a 12% or 15% annualized return to probably 28 or 35 or 40. So I never have to sell the Bitcoin because I have the cash flow from the real estate. We're passing depreciation on to an investor that would never get any depreciation with the Bitcoin. And most importantly, probably, is I'm talking to an audience that knows nothing about Bitcoin. I'm not a Bitcoin pitch. I'm not competitive with any Bitcoin company because I'm not in Bitcoin. Like, my audience is not going to buy Strive because they don't want to go both ways on Bitcoin. They're not Bitcoiners. They don't want to read the white paper, the Bitcoin standard. They don't know who Michael Saylor is. They want great real estate. And, oh, by the way, guys, it's only going to do like 3.5%. It was going to do 5%. It's best in class, pristine real estate. We always want the attention on the real estate, but we added some Bitcoin, so it's only going to do 3.5%. And they're like, I don't want the Bitcoin. It's only going to do 3.5% with or without the Bitcoin. Okay, well, I'll take the Bitcoin. There you go. So that's the investment.
Yeah, you hit on something that I think is important, and I don't view us as competing versus each other. I view us as trying to say, like, our pitch is, if you're a Bitcoin maxi bull, you think Bitcoin's going to go to the moon, that we're able to structure our company in a way that individuals could not. I saw someone pop up a little bit ago. It's what Strive's liquidation price. We don't have one. We don't post margin, because I think margin and Bitcoin do not work together. You see this too many times, right? And so, I made a post over the weekend that if Bitcoin went to $1, we could pay off our remaining $10 million of debt, and we could buy every Bitcoin in existence. We have over $120 million of cash right now. And, the risk
I will be competing with you for that $1 Bitcoin, by the way.
Someone else already said, well, I'm going to bid 1.1. So
yeah, exactly. There goes the game.
And it's obviously it's not going to go to $1. But the point being is that, we're able to structure this in a way that if our Bitcoin bull thesis plays out, we will do well. Now, someone else asked, what happens if Bitcoin goes down to $10,000? So if Bitcoin goes down to $10,000 and it's down 3% from its high, then I mean you've lost 93% if you're in Bitcoin. If you lose 96% if you're in Strive, do you really care that much? Like I don't think you do.
You're going to be pooping in your pants with either investment. Okay.
Yeah,
you will be long poopy and very short profitability. But this is the space we're in. Like that could happen.
Yeah, and this is what, since with this last drawback, not to talk about my vehicle, but comparing these vehicles to one another, I'm gonna be with Eric and Don Jr. tomorrow, so it'll be interesting to get feedback from them about how they're feeling about their ABTC. But with this big pullback, we've had about 1,500 investors in our 5 funds that we started last year. We've had literally no reach out to us saying, "Hey, bro, what's going on with Bitcoin?" Now I have an investor call tonight at 8:00. Then I'll get some, "Hey, what's going on?" We'll get some feedback, but we've had no one reach us and say, "Bro, I need out of that investment. I'm scared of this." Not one call out of 1,500 investors. I think it's tied to a long maturation expectation asset. Or maybe they're not watching Bitcoin. They may not even know it's going up and down like the Bitcoiners know.
Oh, they most certainly won't be looking at it. Okay, so we have another category. I think this is a very different category because this is one, it's not going to be like I can see a scenario where real estate prices do nothing and Bitcoin goes up or both go down. You're still there. It's a very, very different investor. I mean, it's such a different investor. He's never going to be a financial engine. And he's not going to go buy. I don't think, at least in these vehicles, you're not going to take, he's got other companies. He's not going to take some of those companies' cash flows and stick them in the real estate deal. That would be not pragmatic. So I'm not sure what we call that. See, I think he has cash flow that's also continuing to buy Bitcoin. Like he's not a hodler. He's an acquirer. I wish the 5 or 6 million Bitcoiner OGs would have been acquirers rather than hodlers. It really irritates me so much that these guys are holding on to $300 coins while the rest of us are trying to make this market work, paying 80 and 90. We need the liquidity. That liquidity needs to come into this market. And if it has to come through financial products, quite frankly, this is the way like I love all these companies, including the ones that will fail because they're bringing dollars into the system that I think are not organic to the system. Right. And we're only going to grow unless outside money comes in. What Grant's doing is pure outside money. They probably never. Grant, have you done a survey yet?
Yeah.
With that foam on your lip? Give him a close up, Dana. I shouldn't have said anything, man. Shit. No.
I'm a guest, dude. Why do you want to make your guest look bad, dude?
Because, dude, I've been doing it my whole life. I mean, it's just it's a main muscle.
Dana, great seeing you, Dana, at the event in New York, by the way.
Great seeing you. Yeah. Yeah, you're lighting it up.
Yeah, okay. So 80%, over 80% of the people that have invested with us have no Bitcoin exposure. And the Bitcoiners, the ones that have Bitcoin, they're like, dude, can we just go back to the real estate cash model? Because I got enough Bitcoin. I really want the cash flow. And that's the thing, Gary, the people you're talking about, they don't have new cash flow, so they can't buy more Bitcoin. And it's good to hear that you guys aren't doing any kind of margin stuff. I don't know if any of you saw, I posted when Bitcoin was crashing. Bitcoin's crashing. I'm going to sell my plane. By the way, it was 2 separate statements. And the internet went nuts assuming I'm buying on margin. I would not know how to buy on margin. Like somebody would have to walk me through how to do it because I've never done it, Matt. So it's good to hear that
you're the master of margin. Are you kidding me, dude?
I don't buy.
Oh my God. You're the margin king, bro. You just call it debt.
Yeah, but it's long-term debt, dude. It's 5 and 7 and 10 years.
I remember that it was margin debt. And
that's not a margin though, dude. That's long-term debt, dude.
Yeah.
Secured against a very stable
asset. A lot of covenants that can be breached and have been breached.
I have a question that I also think would help like define the conversation in a way that, listen, with you guys here, I think it's really helpful for people to hear, which is how do you see Bitcoin and like how are you playing off? My guess would be that Grant sees it as pristine collateral with tons of upside, right? Matt, I'm curious. You've been around Bitcoin a long time. Do you see it as perfect money, as currency, as pristine collateral, as something entirely different? My question, because I think that also is going to lead towards what these different companies, like how they're positioning themselves based on what they see Bitcoin's real value as.
Yeah, so I do see it as pristine collateral with a lot of upside. I think it has all of the characteristics of perfect money, except for an extremely important one. And that extremely important one is that you have to pay capital gains anytime you use it, and so it makes it non-functional as money. I'm not going to go buy a coffee if I think that if I have to file a tax form for that. And so something like a de minimis exemption that I know is being, talked about, I would love to see it happen. I'm not overly optimistic that it does happen, but I think if you could do that, then you could start to think about it as a money. But until then, and I don't know if the government will ever get there. I mean, we're definitely going to be advocates for that. I think it should be. I think it's not right, the debasement of the dollar and what that's done to American citizens, how it's pushed up asset prices, and probably all of us on this call have benefited from that. Like I know I've benefited from that, from my Bitcoin investment that I made in late 2016, 2017 tremendously. But a lot of people have been left behind in that debasement trade through asset price inflation. And so, I would like to see that changed. But until then, my view is that the government's never going to stop printing money. I wish that they would get their debt crisis under control. I'll always be an advocate for that. But I thought Doge was the best chance that we were ever going to have as a country to get our stuff in order there, and it fell apart within a couple months. And so I think the nothing stops this train analogy fits. And we want to be max long Bitcoin on that train. And so that's our viewpoint. That's why we've done the structured finance trade investment. That's why we don't post margin. And just on the margin point real quick, we turned down debt convertible notes when we went public as a company. We looked at them very closely. And just to give you a sense on the terms, because the terms are mind boggling. And I know that there are companies in the ecosystem that accepted these terms. You had to post 1.5 to 2 times margin in Bitcoin and keep that maintained. And so when we were looking at the numbers, if we would have accepted those terms, we would have had a liquidation price where we would have had to start selling Bitcoin because we had to in the $50,000-$60,000 range. That's pretty much where we are right now. And so I think that there still is some hidden pockets of liquidity in the ecosystem, and we don't know where they are. I don't think it's systemic, but it kind of leads me to a view in Bitcoin of, obviously we're in a Bitcoin winter right now. Gun to my head, I don't think the bottom is in, but I also think we don't spend much time, if any, below 50,000. Like, could it go as low? It could go as low. That's why we don't have, it could go to 10,000. I have no idea, but I think that bottom will get bought up pretty quickly. And I think that there's, green shoots ahead. And so we want to be max amplified into that because we want to drive total return. So that's how we think about the world.
That was a great answer. Grant, same question basically. Like, how do you see Bitcoin and its function?
Yeah, well, I see it as a technology first. I think about, I was talking to the Shift dude, Peter Shift, and I'm like, bro, gold failed. And he's like, what are you talking about? I'm like, well, it failed, dude. If it would have been successful as a currency, we would still be dragging gold around. And frankly, I think it's failed as a savings account. I don't want a vault full of gold. I've never had gold, never had silver. I've owned a number of businesses, done transaction with millions, literally millions and millions of people for 40 years. No one's ever offered me gold. No one's ever offered me silver. So this idea that that it's some, you know, perfect currency, or like, it's just not true to me. And then the last thing is, you know, I can't get liquidity from it when I want, as soon as I want it, if I need. I mean, there's just so many things to me not right about it. And there's no world that I live in that I think we're going to go back 5,000 years and have gold. So I also don't think we're going to have cash in the future, any of it. You're not going to see it anywhere. You barely see it today. If I went into Neiman Marcus with $10,000 and tried to buy 8 pairs of Louis Vuitton sneakers, they're not going to take the cash. I can't even drop the cash out. I can't get the cash out of my bank. So, like, you know, I see it as a store value. I see it as a technology mostly. Like, I don't really understand that technology any more than I understood what this would be one day. If I'd have known what this would be, I didn't understand social media when I first saw it. You know, first guy that told me I should have a YouTube account. I said, get out of my office, dude. I'm trying to run a business. We were going bankrupt. And then 5 minutes later, I had a YouTube account. And then 12 years later, I had 3 million followers that have seen 10 billion plus views. So that's a currency, by the way, and it holds value and people keep seeing it. So, yeah, that's how I see it. Now, would I be out buying it? I wouldn't personally be out buying Bitcoin with my last 70 grand. And I was given my first Bitcoin. I didn't buy it. Somebody gave it to me. I said, yeah, I'll take it, but I'm not going to buy it. And you know, the way we buy it with the real estate, it's actually improving it's improving my real estate. You know, I can paint the real estate. I could put a new roof on it. I could put a new kitchen in, backsplash. That doesn't necessarily improve the operations of that company. Maybe it gets me a tad more rent, but I still can't control the expenses. But the Bitcoin sure could. Without any exposure to higher expenses, higher property taxes, any CapEx, future expenditure, I can add Bitcoin for my cash flow. Surrender a little bit of my cash flow going in and have an asset that could explode in value. And when I sell them, not now one. I hate, it takes me 24 months to find a great asset and close a deal. And then I keep it for 7 or 8 years and it goes up and we make a double or a triple. It's cool, but I'm back to zero again. I got to go find another asset. And I hate that part of the process. I want to stack the assets. You know, so unlike Matt, our goal is 10,000 units. We're at 15,000 apartments. I'm probably thinking too small in this. We have 15,000 apartments. We want to double that in the next 3 years. And we want to add 10,000 Bitcoin. I'd rather have fewer apartments and more perfect apartments in great locations with that 10,000 coins that don't have any kind of CapEx, property taxes, or depreciation exposure.
Would you agree that having Bitcoin on your balance sheet allows you to be more patient as an investor in the real estate market? Is that what I heard you say?
Yeah, I mean, look, if you're in real estate, you're already patient. You have to be, dude. It's like, you know, the guy congratulates you when you buy it and you're like, see me in 7 years, then we can party, you know, maybe. And even then you don't know. So
it's a lot easier to be patient when there's no chart.
Yeah, exactly. That's the other thing. You know, I don't have there's no ticker
of this hybrid product. There is no chart.
Gary's been invested with me in a project for 9 years. He's never asked me what they're worth, ever, not one time.
Well, I know that he can't. I also have never asked him to liquidate me, right? Because I know it's impossible.
Yeah.
So there's a trade-off there. Oh, wow, no chart, 1 minute chart. People looking at 1 minute charts of Bitcoins like, oh, wow, I thought you told me you were in this for 12 years. Okay, so we know what the debate is. This is I don't think the audience does. Because Grant teed me up here. I'm only doing Bitcoin. I'm going to take the side of I'm only doing Bitcoin. I'm a Bitcoin purist. And, you know, all you fucking Wall Street bitches and whores are just out to suck my Bitcoin away from me. I wish Larry Fink was here because I know he's doing it. He wrote the memo. Who else is taking the other side of Bitcoin, hybrid, SBRs? In fact, maybe everybody just take their own position. Good.
Well, I just took mine. I'm not buying it. I'm not buying it without my exposure to the real estate.
So I think that argument.
And then Matt gets to play. Matt gets to play always. He gets to sleep with everybody at the party.
So that argument would be very similar to a
Diddy. Matt gets to be the Diddy master.
First time and probably last time I'll ever hear that.
That may not be the most appropriate timing on your part, Grant.
But anyways, that would be a similar argument. I'm just going to hold Bitcoin. I'm going to store it to gold bugs. Do I think that argument works for people? I actually do, right? I think the question becomes, if you look at what's happened in Wall Street over the course of the last several decades, that structured finance is the holding vehicles for all sorts of assets, whether it's real estate assets, whether it's planes, all these things that you own, Grant, they all go into structured finance, right? And what you can do with that, and forget, in the global financial crisis, what we saw was when that goes wrong, right? When you pair a bunch of crap and then you slice and dice crap, well, you still get crap. But if you put something that's actually really valuable and you slice and dice it, so Bitcoin being something that's really valuable and slice and dice it, or real estate and slice and dice it, you can create different risk and return profiles that actually better meet the needs or interests of different types of investors. That's just interesting. So the question becomes, do you want to amplify Bitcoin exposure? Do you think Bitcoin's going to go to the moon and you want Bitcoin plus returns? Do you want some sort of income tax advantage strategy? Do you want less volatility than Bitcoin? Because even Bitcoin itself, to your point, Gary, it goes down and people are looking at the 1 minute chart saying what's happening. Well, that person that's looking at the 1 minute chart and freaking out, they shouldn't buy amplified Bitcoin, and they probably can't even buy Bitcoin because they can't handle the downside volatility, right? And so what's right for them, it might be digital credit, it might be a pairing of real estate and Bitcoin. They need Bitcoin minus volatility because they can't handle that. But that's not true for everyone. Some people can handle that and are true believers. And so to me, the answer is I would never die on a hill that there's any one single answer for everyone when it comes to these types of investments. And I think that the people that do that tend to struggle understanding the different risk return profiles and why they're different. And so they get caught up in the mindset of this is the right answer. And I just think that's something that I would debate vehemently against.
So Matt, you're like, we have this problem on the show, which is we get really smart people on, and turns out most of us have really nuanced positions, which doesn't play well to like, why do you hate like self-sovereignty and like why don't you support the revolution, bro? Like because we have these nuanced positions that actually different people buying it for different reasons like might want to consider something that provides them more regular dividends and returns, and some people may be holding it completely for the revolution and everything in between. It makes it hard for us to have the like Fox News back and forth yelling at each other.
I'll give you something a little more spicy. You want something a little more spicy? Okay.
Yeah,
here's the something that's a little bit more spicy for you. And it would be that to the Bitcoin maxis that think that none of this stuff should exist, it's all scams or grifts or whatever, that they fundamentally don't understand that they want Bitcoin to be the most valuable asset. They think it's the most valuable asset, but they think it's going to live in their little libertarian world and no one else is going to want it. And the reality is that I think Bitcoin is one of, if not the most valuable sources of capital that's ever been created. And because of that, sovereign nations want it, corporations want it, people that are doing SBRs or fund structures are going to want it, and individuals are going to want it. And everybody's going to be fighting for it. And that was always going to be the case if it succeeded. And if it didn't succeed, then everybody that owned it could just do their, self-cussing. That'd be the only types of people that own it. But that's not the reality. And I think that's actually a good thing for Bitcoin, but it can be frustrating for people that, wish they could control a decentralized asset and they can't.
Sorry, I thought Gary was talking for a minute. I was confused. It sounds exactly what you say all the time, Gary. Does it not?
Somebody's here shilling for JP Morgan and the big banks. We see you, Matt.
You see, this is what happened when you get
Matt, let's drill.
on
Dude, love the
camera,
comments
right?
though. These comments are awesome.
Let's drill down on that though. So right now, I have an opportunity to buy $60,000 Bitcoin. I can buy derivatives of that. I can invest with Grant in his real estate play that I have to sign a bunch of documents on. That's cool. I mean, I can.
We're fixing that, by the way, Gary.
The liquidity on that real estate, by the way, is really problematic. I'm not getting out whenever I want. Bitcoin allows me to do all this myself.
We're going to fix that too, Gary.
And I'm not having to pay 2% fees, right? And over 10 years, if you're really saying 10 years, you're giving up 20%. I'm just really struggling because Bitcoin for me is like, and you can make fun of me. I'm not a libertarian. I'm just a conservative guy trying to acquire what I think is something like Manhattan real estate, but I can buy it and I'm not competing with the Rockefellers to buy a piece of it. In fact, Dana can buy $800 worth right now, and I could buy $8 million, and she and I are going to pay the exact same price for that real estate. That's never happened before, ever. So I'm not sure. And I'm looking at these companies that are brilliant people like yourself, and their stock performance would not indicate that has been a great strategy. Like there's confusion in the marketplace, actually, in my mind. Because I'm like, wow, Naka's going to go out of business. They'll be a forced seller for 50 or 60,000. This guy will probably go out of business. He'll be a forced seller. That'll happen in probably some weird bankruptcy. I do a deal with Grant, and it's like, okay, but I'm not.
Grant never loses.
I do a deal with MicroStrategy. I mean, I want to hear where am I going to get the massive upside for all the risks that I'm allocating out. I'm effectively buying risks that I do not have with Bitcoin. Yes, I'm investing my capital. Is that a fair statement, though? I am investing.
Yeah, it is very fair.
Exactly. With risk, I am now enhancing my risk, and therefore I should get a return that's greater than Bitcoin.
Yes. So you are enhancing your risk. And so as an example with Strive, since we've announced our Bitcoin strategy, we've underperformed Bitcoin by 5%, though. I think sometimes people will look at the peak of some of these Bitcoin treasury companies, and the reality is that we were all these companies were in the midst of M&A transactions. I didn't even control the company. There was no liquidity in the stock. It pops up, but when you actually say, well, what's actually happened since it was announced? Well, is 5% underperformance versus Bitcoin bad when Bitcoin's down 30% since we announced the strategy? I actually don't think that's bad at all. We talked about strategy, MSTR, and kind of what they had done in the depths of the 2022 bear, underperforming Bitcoin pretty drastically. But since inception, they've outperformed by 350%. And so if you had a long-term view and you've held over the long term, they have delivered, actually. And I think when you look at what would have to be true for it to collapse down to zero, they would have to be at such a drastic discount to Bitcoin that they'd probably start buying back their shares at that point. And so I think what they've done so far it's hard for me to say it hasn't worked. It hasn't worked for people that bought the top or that had a short-term mindset. And I think that's the hard part. And so I think, to your point, Gary, if you just want I want the safe thing. I know Bitcoin's going to go up. I don't want to trust Sailor. I don't want to trust Matt or whoever. Buy Bitcoin. I don't think anybody's saying that that's bad. And I wasn't calling you like a crazy libertarian for thinking that. I think the people that are crazy libertarians are the ones that say that these things are bad in themselves, and that they can't even have a conversation of why what Grant's doing could be interesting or why what Strive's doing could be interesting. Like that's I think that the right answer is, in my view, is that all of these things could be interesting when you understand what they are, but they're not going to be interesting to everybody. They're going to.
Jeff Booth says that these two worlds can't coexist, man. Like, I'm a Bitcoiner.
Yeah, the lawyer, the young kid that says he's a lawyer, he gets all aggressive in the spaces. He says, your Grant, your platform makes no sense at all. Why would anybody put real estate and Bitcoin together? It's just complete. It's just a grift. And I'm like, bro, why are you trying to make sense of it? Like, you're never going to invest in it. You don't even need to have an opinion. Like, you're not going to invest in my deal. Why spend the time and energy on it? Or you think it's actually a creative thing and you're complimenting me in reverse. Now, you know, and I know, Matt, there's a bunch of these guys that simply are not going to be able to run a business, period. Forget the Bitcoin. There is no strategy. The marketplace is going to determine whether these companies live or not. It will not be Bitcoin. And I hear this all the time. Well, if Bitcoin goes up, it'll say, no. Okay, they'll end up with some Bitcoin and a failed company. Okay, the marketplace always decide which phone the people are going to pay for, you know, which plumbing they're going to buy, whatever it is. So the marketplace, I think, will determine whether or not. My big concern about them is there's too many, and until there's not too many, the ones that are good will be identified with the too many.
Yeah, I agree with what you're saying, Grant, but just one kind of caveat to that is that I just don't think that that's surprising, because when you look at like traditional, and I know we're talking about operating companies here, but when you look at active equity portfolio managers, 90% of them underperform a passive index. That's why a passive index has rose. Now, hedge funds, I think, are more likely to create more interesting risk return profiles, but then the fees that they charge, I mean, 2% and 20. And so sometimes you see even some of the criticism of the fees in the space. And when you compare it to a hedge fund, I mean, it's not even close. Like, it's not even close to a 2 and 20 structure. It's probably closer to like 1 in 10 or even less as you scale. And so is that actually a bad cost for a unique risk return profile? I don't think it is, but I also think it shouldn't surprise anyone. I'm not saying it obviously doesn't surprise you, Grant, but I think that it has surprised maybe the broader Twitter ecosystem, how many of these companies fell. Well, I mean, also look at startups. How many startups fell? 90% of startups fell. Like, it should not be surprising when innovation happened that most won't make it. That's just
it's 100%. That's very fair.
When we start the conversation, Grant, I put a couple of things together that I'm just curious to get your guys' take on. So Grant started the conversation by how he didn't want to be called a Bitcoin Treasury company because it didn't really apply, and he was nervous about all of these people knowing what Matt just explained with some of the risk. Matt, in one of the answers you gave, you were talking about hidden pockets of liquidity, which I assume to mean that like is the liquidation point for some of these companies. Is there any concern about getting drugged down by the failures of some of the other companies? Because in the public's mind, I still think there's not a lot of distinction between Strive or Naka or, you know, any of the other, roughly speaking, Bitcoin Treasury companies.
Mm-hmm. So just you asked a couple of different questions, and maybe to unpack them one by one. So on the liquidation points, what they would likely be in practice would not be a Bitcoin Treasury company liquidating all of their Bitcoin, but like the beginning of, you know, you have to trim a little bit. And you're seeing this with a few of them already, right? Where you're seeing some of the companies start to trim some of their Bitcoin positions. And we already talked how Strive doesn't have margin. That's not a risk for us. So, you know, I think that there will be potentially, you know, in a down market, the baby thrown out with the bathwater, that the companies that are doing well might trade at discounts for during the bear market. I think where that reverses is when Bitcoin goes up, because when Bitcoin goes up, and this gets into for us at least, like the amplification that we have. I mean, our equity, and we use amplification, not leverage, because it's not debt. But, you know, when I was at CalPERS, I probably spent 5 years defining leverage. And so I've debated this way too much. And so just to like answer the question, it kind of is leverage, but I think the distinction to use amplification is because it's not debt, right? It's not callable. There's no margin. It's different. It's financing, right? It's not, no one's saying it's not financing, but we basically have, in a non-debt manner, 50% levered exposure to Bitcoin. And so if Bitcoin doubles, that's just math. Our financing liability stays fixed and the value of the Bitcoin goes up. And so one of two things happen. I think that our equity in that instance will be very popular. But if it didn't, then we could be buying back the stock in massive ways and accreting Bitcoin yield to our shareholders, right? Like because the math just works one way or the other. But to kind of maybe even touch on the buyback stuff, because sometimes people like, your stock goes down, like, why aren't you buying back shares? Like, understand the regulations of being a public company. Like, you have to think about these things as like slow moving ships. Like, you can't be, in the ATM issuing shares 1 month and then doing buybacks the next and kind of going like back and forth. Like there's ships moving in the ocean. Like, you can turn them around and then you can turn them around again, but they don't move as fast as you'd want them to be. Otherwise, you'd be breaking all sorts of securities regulations, which is why you don't see people in the space doing it. I wish people would just be more open about it. Like, it's that's the way the real world works. But if that persisted for a long enough period of time, you would definitely see that, and the math would just be the math. And I think it would be amplified Bitcoin exposure.
Hey guys, thanks for joining. Remember to like and reshare our video. We do debates every Tuesday at 5. And also we got the information. Thank you so much. We appreciate you.
This was fun, guys. Thanks for having me.
Yeah, and by the way, guys, when you guys comment, Gary picks one lucky person out and flies them across the country to his annual birthday party. So make sure you comment. Best comment gets a free trip to Gary's house.
That's
Dana, are you closing the show up?
No. I'm just reminding people to reshare.
Matt looked at that.
I think Dana.
Matt looked at that as an opportunity to exit.
No.
Okay.
I could go for probably another 10, 15 minutes if you guys want, guys.
Matt, are you too busy for us? It's okay.
Never. I'll come on whenever you guys want me to come on. I can keep going.
Matt, when do you think I'm gonna, once I take my Bitcoin and give it to you or Grant or Dustin, when do you guys think I'm gonna start seeing these outsized returns?
Ours is very simple. I think if Bitcoin starts to rise 20% plus off the lows, you'll start to see Strive perform really well. In the midst of a bear market, I mean, I'm not trying to hide something. We're not magicians here. I think we're really good at creating a really intelligently structured company. But if Bitcoin goes down to 40K, we probably match that or probably underperform Bitcoin. We're not designed to outperform Bitcoin in that scenario, but what we are designed is to have a permanence to be able to ride that out and to ride that out well and better than individuals could and most could. So if you're bullish on Bitcoin, I think that, and you think Bitcoin goes up, then you should expect us to do well.
And then if I do invest with you versus the guy to your right, the real estate guy, do you also send me merch on a regular basis?
Yeah, because I sent shit to my investors.
He hasn't sent me very much stuff recently, so I may be looking for some new merch.
So if
I'll hit you with some merch, bro.
If you invest, we'll hit you with some cool merch. We actually are going
to Vivek for governor hat.
Actually, I still have some classic Vivek for president gear.
There you go.
Those are going to be collectible items someday.
It's funny. Giving Gary merch is probably the best investment you can make. I've watched Gary on at least 10 occasions take the hoodie off his back and give it to somebody to promote Bitcoin.
It's because I'm a good guy, dude. Good guy, doing the deed.
I mean, it's a solid investment. Give Gary, he's going to onboard somebody with it. He's going to use it as an opportunity to get somebody in.
I bring Gary merch every time I go to his house. Jackets, hoodies. You can't bring one thing either, Matt. And it's got to look good. It's got to be cool, Matt. It can't be low energy.
Yeah, I like a real broad selection: pants, socks, and the t-shirts. I mean, this is a big G&A expense for you guys. See, I don't really mind the 2 and 20. I would like the 2 and 20. In fact,
Who charges 2 and 20, by the way?
But I don't mind the 2 and 20 or the 1 and 10. But let's do it all after like after I get my principal back. I like that part. I would do.
I don't think that's going to happen ever.
I know. Not
Hey,
right
Matt,
now.
can CalPERS buy Bitcoin direct?
They could. They don't buy any commodity, so they don't.
They don't have a
oil.
mandate to buy a Bitcoin.
Yeah, so they don't have a mandate to buy Bitcoin.
Did they have a mandate to invest in real estate?
They do actually.
Thank you.
And so their mandate at a holistic level, yeah. So it's to actually earn a 7% return.
Yeah.
Right. And so it's kind of funny because you think about income bonds as something that yields 4 or 5%. And so for them, that's kind of, they have a lot of assets there, but that's, it's 7% minus, and then they try to get 7% plus on the equity side and blend it together. What I think is interesting about Bitcoin and how Bitcoin can play in this is that you can actually create a higher yielding vehicle than their benchmark. So you can turn income into an offensive strategy rather than a defensive strategy. I think you could probably do that, with what you're doing, Grant. Digital credit also does that, right? Where SATA pays 12.5%, Stretch pays an 11% range, right? That's a interesting asset, right? Where you're not owning Bitcoin, but you're earning more than your hurdle for them, right? Their 7% hurdle. And so I do think that there will be room for that. Just as an aside there, several of the Canadian pensions have invested in Strive. They've invested in Strategy. They tend to be more innovative with less restrictive documents. So they can move quicker. And so we have seen that already. It's been publicly reported. There's been that's been going on. So I think that is a interesting kind of tea leaf in where this might be going.
I can see how you would be, all your vehicles outside of Bitcoin, the position I'm taking. And I think this is what, the community I'm representing needs to understand. Hey, this is onboarding the whole planet. Like, this is the way this is going to happen. Like, you really should not make wrong of people building something around Bitcoin. They can build it around Hex if you want them to. Like, I don't get the hate, because you're going to bring in Norwegian funds. CalPERS will be here, but they'll come in late, right? But they'll get an introduction from you to Grant. And hell, man, it totally makes sense that they're going to do some of this stuff and never touch Bitcoin, right?
Yeah, 100%. And it's going to take a few years.
Yeah.
Right. Like you take what Grant's doing as an example. Well, how does someone like CalPERS look at something like what you'd be doing, Grant? I can tell you the high levels for some of those pensions is they're going to say, well, I'm going to want to see this idea be in existence for 3 years. And then after it has a 3-year track record, then I'm going to open my eyes. It's not like I'm going to cut you a check at year 3 in one day. It's like I will open my eyes and look at what you did and start a 1 to 2 year process to decide if this makes
case
sense in our
studies.
portfolio. Yeah. Right. So you're talking about something that for them is probably 4 to 5 years away. Now their public equity is passive. So MSTR is already in there. Strive would just get in there if we grow large enough, right? Like that just kind of happens. But I think that people want to see what you're doing. Like, well, why isn't a pension investing in it, 3 months after you launch? It's because you got to go get a track record and you're going to go have success. And then you're going to show them that success and be like, oh my goodness, like look at this risk return profile that he's done. And then you succeed. But that's still 4 or 5 years away and people want it tomorrow. But I think that this innovation will create those pension investments over time. It just takes time.
Dustin?
So, it's interesting. I've faded most of the Bitcoin treasuries that have been pitched to me, like right over the last year or so, all of the DATs, all of the craziness. But Matt, I gotta tell you, after talking to you today, like I'll probably go out and get some Strive. Like I've been very impressed with the very realistic outlook on like what you're doing. Very, very impressed. I'm gonna say this. I think the healthiest thing about this dip is going to be weeding out separating the wheat from the chaff in a big way. And I believe that the well thought through position strategies will rise to the top. And will benefit from like losing some of the weaker people who are just trying to cash in on the hype and other things. So I found this to be one of the most illuminating conversations we've had around this topic. So I'm very appreciative. I love what Grant's doing too. Like the specifically when the point Grant just made, I just want to emphasize when he asked if CalPERS can invest in real estate or is being pushed to invest in real estate, and then asked the same question about Bitcoin. The juxtaposition there is really important to pay attention to. If you're a Bitcoiner, like Gary's representing here, you want Bitcoin to be able to like start working its way into these industries. You've just heard a realistic timeline of what that's going to look like for these large public pension funds and other funds. This is the way that like we gain that market share and idea broadly. So I'm really
you got firemen, policemen, teachers. They cannot invest in Bitcoin today. So it'd be an act of God for them to get their whoever's running that pension fund to actually pay attention to this conversation. And back to what Matt was saying, it's going to be 3 years before they're going to have the conversation. Another 2 years of case studies. So we're, what do y'all always say? We're early. Look, I know from my viewpoint, we flew a bunch of properties this weekend. And every time I look at the properties now, I've been buying real estate for 40 years. You can only make the whole process is really done on the selection of the asset. You're not going to be a better manager. You're not going to find a better paint. It's all about the selection of that one location that's going to survive for long periods of time. I'm flying over all this stuff and I'm like, oh, there's one that would be perfect. You got to look over another 100. There's the perfect next one. But one of them's owned by a family. They're never going to trade it. So you're down to one. So they're going to get some premium stupid price because everybody wants that one. And I still cannot control the cycle. And I still can't make it worth more than it's going to be worth today, any more than anybody can make Bitcoin worth more than it's worth. But if I have enough time there, so even then, if somebody's going to come over the top like Blackstone and say, no, we're going to pay another, because it's going to go to the highest dollar bidder. So it's how do I buy that asset? Even if I steal it, like with real estate, with what we're doing, we steal the real estate. All I got was a discount. And a discount is not really valued today to anyone. A discount is not valuable to anyone until you sold it or passed it on to the user or the consumer of that, in this case, the renter. But the discount does not add real value. A lower price is never real value. So when we take that lower price, all I did was look at this like, okay, I'm going to take the lower price and I'm going to fill it up with something better than a discount. And then Peter Schiff said, oh, you should fill that gap in with gold. I'm like, yeah, they're too similar, dude. Real estate and gold are so similar. They're both heavy. They're both tangible. They're both ancient. And so he
owns 4 properties and brags that he paid cash for all of them. I think Matt's got to go. He told us about 12 minutes ago he needed to roll. Matt, you want to make some last comments? Because I don't want to trap you in here.
No, this was a great conversation, debate. I think it's good to have these conversations because, I mean, it's eye-opening when we get on to before we record and we don't even have the same way to even define the conversation. It tells you how early we are, how we're all in our different ecosystems, and I think as Grant's going out there and orange pilling people that have no Bitcoin exposure. And we're kind of doing if you're a Bitcoin bull and you want to, have amplified Bitcoin exposure, we're the play. I think it's good to come back and say, how are these different conversations going? Where are you having success? Where are you not having success? And that way we can at least define how to talk about the space. I think that's a really healthy thing. So much appreciated, guys. Keep crushing. We'll try to get you some swag, Gary. If you have any, I'll send it back my way too.
Yeah, I'm gonna send you some stuff. I'm gonna send you some 10x Strive. Strive for 10x.
There we go.
Sounds like a
10x would be pretty lame. Where I think we're going.
If you guys
Grant.
have any more questions, send me a message. We'd love to have you back on for an update, Matt. It was awesome to have you.
Sounds good. Thanks, guys. We'll chat
Thank
soon.
you, buddy. Appreciate you, Grant.
Yeah. Hey guys, let's stay on and talk about Matt when he's gone. Okay.
Oh, most certainly. I mean, that's of course. I mean, what?
Yeah.
Hey.
Yeah. I feel like the guy left the party. The guy left the party, Gary.
Yeah.
Yeah, never be the first one to fall asleep. Like,
Yeah.
Never ends well.
Yeah. So
I was wildly impressed. I was wildly impressed with Matt. That was one of the most impressive and easy to conceptualize Bitcoin treasury strategies I've ever heard somebody explain. So, right, it's one of the only times on Bitcoin treasury that I got what they were actually trying to accomplish. I've probably been pitched 3 dozen of these, and that's literally the first time I saw like a very well articulated, clear strategy of how to make it work.
Grant, what do you think?
Well, every time I have one of these conversations, I like my model better, But the other thing is they're just
every time I have this conversation, I like my model better.
Yeah, but yeah, exactly. So there you go. So, buying the bias. So all I'm saying is there's just different. I'm just aware of how big the space is and how there's different strokes for different folks. And I'm also aware that right now that my audience is not Bitcoiners. I said this from the very beginning. I'm not talking to a Bitcoin audience. I was in a room the other day and some guy said I was shilling my product. I'm like, bro, I don't even expect Bitcoiners to buy into my vehicle. Okay.
Yeah, your target audience is real estate. No?
Yeah, not really. I mean, yeah, it is. It's yeah, it is. It's people that believe in me. This is what Mike Saylor told me the first time I met him. Grant, you should be doing this. I said, why, Mike? He says, because you have an audience that trusts you. Number 2, you have a real business that has cash flow. 3, people have to live someplace. Like it's not going away. Your story is ancient. Not 99.9% of planet Earth, including a 9-month-old, understands real estate. Oh, that's where I live. Now what percentage of the planet understands Bitcoin? I mean, I don't less than 0.01%. Nobody understands money. How could they understand Bitcoin? So it's going to take more than one book to get people to understand the Bitcoin standard because look, I don't even understand what a loan is or a credit score or leverage. Hell, most people are still calling their house an investment, and it's not. So there's just got to be a place where people can go and not have to get an education in order to buy something. When I bought this phone, I knew nothing about it, guys. I bought my wife a car for Christmas. Nothing. I know nothing. I knew one thing. It looked good. Like that's all I needed to know. It looked good. Boom. That's what I'm getting there. It's available. It'll be at the house. I know nothing about it. I will never read the owner's manual. I didn't read the sticker. I think I got a good deal. But other than that, I don't care. And I just think that the Bitcoin spaces with these guys that have studied Bitcoin for 15 years and still don't own a whole coin. Sorry, but no offense, but it kind of matters. It kind of matters that you bought 10 pieces when it was 100 because you had $1,000 and you haven't added any in 14 or 15 years. It's a different investment today. So how much conviction do you really have and how much credibility do you really have when you're going to tell me about Bitcoin and in truth you haven't added it in 14 or 15 years and there's been a $67,000 price change. Putting $1,000 into an asset is different than putting $690,000 into an asset. And we need that's going to be the new buyer, by the way. This new buyer is going to be a big money buyer that I think people are underestimating how many big checks are going to be written. 14 years ago, there was no big checks written. They were tiny, $1,000, $2,000, $1,500, $500. These checks are going to be now. It's going to be like I'm buying 30 Bitcoin at a time, and that's $1.8 million. It's a different game now. And these people are going to be, you think 15 years, or maybe they traded. I don't know. They're getting in it for the money though. Like there's 65 million millionaires on planet Earth. If only 20 million of them, just the millionaires, bought one coin, guy's worth $1 million. He throws down 67,000. He's got a car. His cars all cost 67,000, and he's got 6 or 8 of them. If I just told him that, bro, buy one car, no insurance, no garage, no rust, no oil, no gas, nothing. Nobody's going to wreck it and damage it. And 10 years from now, it's going to be worth probably a Bugatti. See, that's a great pitch right there.
Yeah.
Buy a Toyota Corolla, sell it when it's worth a Bugatti. Might take 15 years. It might take 20. But look how many car collectors are out there in the world. If 1 out of 3 millionaires did that, you don't have any Bitcoin left.
You know, it is so amazing to me that like he and I have never like done this, but Grant, this is the exact math that I did when I came into Bitcoin. I'm like, 340,000 billionaires. I know 12 of them that are in this. You got 62 to 70 million millionaires. Ultra high net worth, there's 240,000. No one is allocated, man. I think we have 10 million people in Bitcoin. 10 million people out of 500 million. So I think one of the things that came out of this tonight was, hey, we're still very early. Nobody really knows about Bitcoin.
And Gary, I would just say that and I was telling my guy Jared at my office this. Dude, marketing is the number one problem in business. Whether it's AI or Bitcoin or hamburgers or the strip joint or the next business conference,
and scaling profitably.
Well, no, number one is marketing though. Like you have to market, okay? Bitcoin has a horrendous marketing machine. And AI is going to have a mass marketing problem, okay? Because like I use Chat GPT. Somebody showed me Claude. I threw Chat GPT away. I'm like, fuck, I'll never use that thing again. Boom, it's off my phone. Now I'm on to Claude. The moment somebody shows me something faster, better, bigger, swinger, whatever, dude, I'm going to move to that. There is no allegiance. There's no loyalty to a product ever today. So it's a marketing game. Somebody's got to show me that Claude app. Somebody's got to show me Grok and how I use it. Now, why do I like Grok better than Claude? Because Grok is going to be a social media. And if you guys aren't using Grok on these things, Grok is going to be a mass social media tool. It's going to be an AI social media, something that can go viral. Okay. Like it can go viral. It can actually push a social message viral. And so if you guys look at any of your feeds, like go back and look at that feed where I said, Bitcoin's crashing. I'm selling my plane. It was 2 separate statements. The number of people under their comments are, hey, Grok, what's this plane worth? Hey, Grok, is this true? Hey, Grok, is he on margin? Hey, Grok. Like it was crazy how many people don't even know how to comment. So they're going to reach out to AI to figure out what a comment is.
Seriously. Sorry, Grant.
No. I'm just saying marketing, anything you can get in on the marketing game. And I think that's what Elon knows that Grok, combining Grok and BTC, by the way, onto X. Okay. It's going to allow him to disseminate into society. So like this iPhone did.
Are you nice to your Grok and your Claude?
Oh, no, not at all.
I'm not either. I got yelled at because I was angry at Claude because she was doing something wrong. And now I'm like paranoid because, you know.
Yeah, no, I think you can tell them like, hey, drop all the niceties, just matter of fact. I don't need hello, don't need good morning, don't need thank you. Just boom, drop it all.
Yeah, well, now what's happening is everyone's forgetting how to read and write. So, you know, there's like people out to startups. I'm a fan. I use it too.
Yeah, I think if people go from reading and writing to learning how to ask great questions, it's going to be an upgrade. Because the one deficit that I see people have, if they don't know how to ask good questions, and all these AI platforms force you to ask a better question. They even prompt you with a better question, right? So, but the problem is people are lazy. They don't even know what to ask AI about to get started with the process. And on a side note, for anybody listening right now, man, if you're 30 years old, 25 years old, or you're out of work, you're 55 years old and you're out of work, dude, you should become an AI consultant. You could make $1 million in year one with 8 clients. 8 clients, $10,000 a month, cheaper than they can hire anybody for today. The company would have no HR exposure, no insurance, no health insurance, no office. Dude, you just go get 10 clients paying you $8,000 a month, or 8 clients paying you $10,000 a month. You make $1 million your first year. You just need to learn about and go put it in their company. And then there's your what is that? 13 Bitcoin in 1 year.
It's wild how fast that space is moving. It's going to be interesting to see what happens with the Twitter upgrades that are coming too. I saw that all the money market stuff and trading stuff that they've been working on since Elon bought it. They're expecting that in the next couple of weeks. I think we're just going to be in this like really interesting time and space where things just upgrade so fast, and it's the behavioral changes that I think are where the big opportunities are. Because like the old model of doing everything is antiquated, like it's obsolete. It's the BlackBerry when the iPhone has come out, to use Grant's analogy. So
yeah, we should do an AI discussion. I think maybe I can find some good AI experts. We talk about AI flows and then security.
Dana, what are you using for AI?
I have a Claude bot. I also do, I have Clear, and then I have ChatGPT with a bunch of different prompts, and I kind of refine them. So I don't have to do it again and again. And that's what I primarily do right now. But there are people who have custom AI flows. So like if you're a lawyer and you have a platform and you have a prompt, and then that prompt always goes through your SOPs, your standard operating procedure, your law team, etc. Like you can just get very customized responses and advice that the lawyer himself would have to take many, many hours to do on his own.
I think lawyers are some of the first people to get like.
Oh, they're going to get whacked, bro.
It's great. Like, it could happen to a nicer group of people.
Couldn't happen to a better group of people.
That's true. Can you imagine going to court and representing yourself?
But first, they're going to blow out their margins. They're going to make so much money in the next 3 years. They're going to make so much money.
Why?
Because migration, man. People don't move that fast. Look, the group of people that I'm representing on the Bitcoin side, like we have not really appreciated scale on a global level. Scale, and I agree with Grant on marketing, but like you can market till you're blue in the face, but you don't even have the capacity to scale. So it's just not something. This is a physical problem.
I agree, they're connected, Gary.
Problem, and then you have a whole group of people who helped build this that are literally trying to keep it as it was built. It would be the same as me building a company with 12 men and women, getting to 1,200 and saying, I am not changing my behavior ever, no matter what. Well, if you manage 1,200 people the way 12 guys came together to organize something, you are going to get sued into oblivion. Okay, it just doesn't happen. You start losing scale of economy. The economies of scale, you lose, when you scale, you lose intelligence. You lose margin sometimes until you don't.
Yeah.
And there's not enough middlemen in between Bitcoin and the user. And it's y'all built it this way. Sorry, we're going to go through this big chasm where there isn't any peer-to-peer shit. Like if you want to buy M&Ms, awesome. You are accomplishing absolutely nothing. Now, if I start seeing multi-million-dollar transactions going on with Bitcoin, to me, that is a full use, peer-to-peer. We have checked the box. I don't have to keep jumping over a hurdle I've already checked. It is being used as value between two players on a fairly regular basis. It does not have to be used for microtransactions. It's fucking stupid. Okay? Nothing was built for microtransactions. So this is going to be a transition, whether we like it or not. And the tools on Wall Street, the very thing that Bitcoin was arbitraging, is one of its issues. Okay, and we're the Bitcoin community is trying to force everyone into my issue, which is self-custody. That is not the way the old money is migrated. And you're literally trying to steal a lover from someone that they have become they may not make very much love with this fucking partner they have, but they are been there 30 years. They're not calling Bank of America, hey man, move me to self-custody. It's just not going to happen, guys. So, and unless, we have a bunch more billionaires that we know inside of Bitcoin that are going to liquidate their Bitcoin that they bought at $30 so that they can re-up and buy at 90, you better fucking damn sure bet and pray that Wall Street comes into this space, however they come into the space. And then we can decide who the good actors are and who the bad actors are. But just in my case, if I wanted to go pure Bitcoin, you would lose so much value. Like I don't know why you would want me to do that, because I'm just looking at places where over time I can scrape from the old world into the new world. I can't burn a house down. It would be stupid to burn the house down, by the way. Dana, you want to close this out? I think it's been a good show.
Yeah, great one.
It's a really good show.
I wish one of the things I wish we would have covered, and I didn't want to because I thought we didn't have enough people on the panel, was hey, why would I, if I'm going to go buy an SBR or a Treasury company or set up one or do a hybrid, I might as well include mining. I mean, that's another option for my capital. I would love to have that conversation. Maybe Mike, what's his name? Mike, the mining guy. Mike blows my head. Anyway, maybe he could come on and just talk about, hey, why not a miner?
Okay.
All right.
Gary, I could probably get Eric on here to talk about ABTC. So I don't know how big the audience is.
3,000 people.
Yeah.
All Bitcoiners.
No, 8.
Oh, 8,000?
Live. Yep.
Anytime, buddy. I mean, there should be plenty of people just between you and me. So, well, Dana, you want to close this out?
I'll set it up. I'll set it up with you, Grant. Thank you, all of you, for coming. I always learn something. Please tell us if you have any topics or people that you feel like would be really good for Cardone debates on Tuesday. Gary, yes?
Yeah, by the way, I need everybody to email my brother, Grant, at grantcardone.com. And for all 8,000 people in the audience, he has swag for you, okay? He's got this really cool Cardone. Don't be a bitch. It must cost $300 each. He's giving 8,000 of those out today. So you email Grant at grantcardone.com, and we'll see you next week.
Okay. See you guys next week. Bye-bye.